Good morning, guys. Happy Thursday, and we got the markets gapping down here this morning. So futures for the Qs down about 1.5%. They were down as much as 2% a couple hours ago, and the SPY futures down about 1% as well. So last couple of days, we've made a nice move here. We had daily squeezes on the index, Apple, Amazon, Chipotle, Salesforce. The list goes on and on. All the daily squeezes fired. We got our 2 to 3 ATR, average true range, move away from the 21 EMA. And at that point, guys, that's generally the move you want to look for. Of course, the market can continue to rally higher, but it's a probabilities thing. Once we make a 2 to 3 ATR move away from the 21, the probabilities lean towards not necessarily the market rolling over, but at the very least, the strength coming to an end and everything chopping for a bit. But we can see this morning here the indexes are making a pretty good fade. So the question at this point is, guys, do the buyers step back in, or are we going to ultimately make the move back down to the 21 EMA? We got earnings coming up. We have an election coming up. So obviously anything's possible, but it'll be interesting to see. So next couple of days, guys, as far as, support to the downside, that's going to be my focus here on the indexes. If we continue to sell off, do we end up banging back off that 21 EMA and then continuing the trend from here? So we will keep an eye on that. But generally, once these daily squeezes fire, they're going to continue to run as long as they have that momentum. And you look at the indicator here, we get the bullish confirmation that momentum is getting released to the upside when we get those light blue bars. So though the daily charts were still looking strong last couple of days, if you look at the 4-hour charts, and this is the case for not just the indexes, but a lot of the leading stocks, going from light blue to dark blue, it's just a potential heads up, guys, that the easy part of the move is over and that we might be losing a little bit of steam and getting a little bit exhausted to the upside. So the 4-hour chart, a bit of a heads up here over the last couple of days. And here's, guys, what I think is really important. We continue to get presented with some good looking setups, but all the while, the last couple of days here, you got to respect the fact that the market is extended, and you got to take that into consideration. So when the market's extended, we can continue to play the market to the upside, but I think there's a couple of important things. One thing is the consideration, guys, of getting a hedge in place. Either buying puts on the index or doing what I did, selling a call credit spread. You have a call credit spread. I'll show you guys what I had here. I closed one yesterday, but I got one more open. And on the Qs, guys, we're making the big move, firing the daily squeeze. And what I did here on the QQQ was take advantage of all the big call premium coming in as the implied volatility was going through the roof. And I got a couple of great call credit spreads. So the first one I had, guys, was for next Friday's expiration. When the market was starting to sell off a bit yesterday, I closed that for about half of its max profit. And then the one remaining position here is for the end of month expiration. And I sold calls out there at 304, and then I bought the 310s as protection. So again, everything's relative to position size and account size, but on that call credit spread, the one that I have open, max profit of about $2,400. So with that being said, guys, I can continue to look for moves to the upside, and in the event the market does sell off or just kind of chopping back and forth a bit, you got some nice premium coming in from the call credit spread. So I think that's important to take into consideration, just the concept of quote-unquote getting that insurance policy to comfortably continue to play the market to the upside, but be protected in the event it doesn't continue to rally. So I think that's important, guys. And then I think what's also important is finding setups that, based on your personal checklist, look like they have a probability of making a move in your favor, but out of respect for the current market conditions, utilize an option strategy where we don't necessarily have to see the stock make that move immediately. So the few different positions that I'm long right now, one of them is Restoration Hardware. Now, I love the daily squeeze. I love the trend here. We're right near the 21 EMA, but because I got respect for the market environment and the fact that we're extended, instead of buying calls, instead of looking for a move immediately, I went with a nice November expiration put credit spread, selling puts down at 350. So the benefit of this, guys, is that the market can continue to chop a bit and even potentially be weak, and I still got a chance at walking away with some profits. So in this environment, you buy naked calls, even debit spreads. We're seeing some volatility here. It can make your trade a little bit tough to sit through. Being down there at 350, not too concerned about the drop here this morning, and ultimately, as long as Restoration's holding above that 21 EMA on the daily chart, I'm comfortable holding the position. So time and cushion. A couple other positions, guys. I only got two other ones. One of them is Activision. So I also like the daily squeeze here very much. We're chilling right near that 21 EMA, and you got earnings coming up in a couple of weeks. So not a bad looking candidate for, call it, a pre-earnings run, but you still got to respect the market environment. So with Activision, instead of getting some naked calls, instead of trying to get aggressive and kind of nail that move, instead, team, I went with next Friday's expiration put credit spread, selling puts down there at 80. So, of course, Activision gapping down with the market this morning. At the moment, hanging above my strike. So, at the open, depending where we are, I'll have a good opportunity, guys, here to make a couple decisions. If the market looks like it's going to rally here after the selling pressure into the open, I can potentially hold the position. But because it's a put credit spread, even if things aren't looking all that great, I can potentially sneak out of here for, let's call it, a pretty meaningless loss. Then take into consideration the profits coming in from the QQQ call credit spread, we still have an opportunity to move the ball forward here today. So that's my thoughts on Activision. We got to see how that goes at the open. And then the almighty Tesla. So I told everyone in the group I wasn't going to trade Tesla this week, and I lied. Jumped into a position yesterday, guys, looking for continuation today and tomorrow of all the momentum firing from the 1 hour, the 2 hour, the 4 hour squeeze. You got a daily squeeze. You got earnings coming up next week. So not a bad candidate to look for a little bit of a move here into the weekend. However, gapping down a bit this morning with the market. If you have naked calls on this, tough shit this morning. Probably not going to be the best. With my put credit spread, selling puts at 450, I'm probably not going to be at a profit. The position's going to be slightly red, but depending where we open, guys, once again, I might be able to sneak out of here for a pretty meaningless loss, percentage-wise. And then we got the profits coming in from the QQQ. So I just think, guys, as swing traders, or even as day traders, a huge part of our goal has to be in tune and in rhythm with, call it, the flow of the market. So when we have these beautiful daily squeezes, or the indexes are just kind of hanging out here at the 21 EMA, we want to look to be aggressive and make the bulk of our money on the easy move, right? That 2 to 3 ATR move away from the 21 EMA, that's where we want to be aggressive. And as we run further and further away from it, we want to look to lock up our gains into the strength. So at the moment, guys, got to continue to respect where the market is, as we always do. So hopefully nobody got caught slipping, nobody got caught leaning too heavily to the upside without any protection. But in the event you did, guys, these are valuable lessons to learn. So if you're a newer trader, and let's say the last couple of days you've been buying calls, and now with the gap down here this morning, it's not looking that good for you, consider it tuition paid to the market. There's just certain lessons you got to learn, and of course in trading, guys, a lot of times we got to take some losses to learn those lessons. But if you can look at it as tuition paid, a little bit of a different mindset. So I wish you guys all the best of luck today. If you would like to check us out, you can do so at focustrades.com. And then if you guys want to keep tabs on all my trades, check me out on Twitter at FTM Alerts. Just look for T's Trades. And this is where I'm posting all my entries and exits in real time. So I appreciate you guys for watching. Hopefully you're taking value from these morning lessons, and I'll talk to you guys later.